I'm on a web page called mybudget360.com, and this article that came out at the start of the year in January says, "Is college worth the money in debt? The cost of college has increased by 11-fold since 1980, while inflation overall has increased by triple, diluting education with for-profits and settling millions with debt." I'm not going to be reading any of the headlines, so if you want to read it, the link is in the more information box. Rather, I'm going to be going over the charts, and there's several charts within this web page. So let's get started. Now, I talk about debt being automatically guaranteed to exist, and well, the effects are not going to be good, and it's not something that we're going to look into the future. It's what we're seeing today. And anyway, this is college tuition CPI versus U.S. home prices versus CPI. Now, to get the actual real inflation of increase of goods and services, the way I would consider it to be accurate is you take all of the goods and services and taxes and everything that people are spending, and then over time, and you got to figure how much that they spend these products on. So if something that hardly anyone buys goes way up or way down, that's not going to affect it at all, basically. Therefore, if people buy so many tomatoes a year or groceries or whatever, then that's the way to calculate it. So therefore, to state that inflation has, I'm guessing these all start off at 100. 100 equals 78, yep. So now that's at 360, so it's been better than triple, or about, yeah. That, I don't know if that number is correct. I don't think it is. I think it's higher, but I don't think it's calculated. I know it's not calculated in a measure that's very accurate. Now, tuition, even though it's up over tenfold, has inflation been up that high on the average cost? I'd have to say no. As far as money supply printing, that's a different story. And, well, tuition's just much higher. I remember when I was in school, right for the first time in here, it was about 1,000 or so just for the tuition for a full year in a community college. Okay, earnings of young college grads versus college costs. And from this chart, we can see that it's the earnings, which would be the more of a pinkish, purplish kind of line, has barely went higher. It's went up 10, 20%, and it's got up to 20% in the 2000 top, and it's been declining ever since. As there's a top, there's a decline, and blue is a tuition cost, and it's been steadily rising. And then this is the number of students attending schools owned by for-profit education. Companies is growing fast. First one in 98 is about a little over 500,000. Today, it's closing in on 2 million, or better than triple higher. This is students, not costs. This is the net change in occupational employment during the Great Recession and after it. And they like to give nouns for it: Great Recession, the Great Recovery. This way you can give a label of a certain event so you can easily understand what event someone is talking about. So therefore, within the Great Recession, you can see that lower wage jobs were decreased by over 1 million, mid-wage by 4 million, and higher wage also by lower than 1 million. And the Great Recovery to date, well, it was a gain from this period of time frame, Q1 of 2010 at last year, a gain of over 1 million on lower wage, which pretty much got all of its losses back from the previous year. Mid-wage occupations got about 5-6% of its losses back, as it lost 4 million. What did it get back? About 400,000. And then maybe about a 300,000 loss on higher wage occupations, so it has continued to lose even more. So when you talk about middle class getting diluted, this is the perfect chart to show you exactly what they're talking about. This is the percent for profit college students attend schools that are Wall Street owned. And this is just going over, there's 295,000 private equity owned students. Mom and pop is the 535,000, and publicly traded 1.4 million. So they're the bigger ones. Let's now go on to this chart here. This is the net gap between younger and older Americans, and this is how much the median net worth is. In 1984, anyone who was 35 and younger, their average wealth was 11,000, and those who were on their way to retiring or newly retired at 65 and older were over 120. Now, in 25 years, up to 2009, again, this is interesting because that's a major decrease. Net worth has went down from 11,000 to 3. I don't know if debt being guaranteed to exist makes this automatic to occur, but I'm going to guess yes. And then we have 65 and older. It's went up a little bit, so 50 on top of 120 is that's not much. That's about under 50%, as inflation has been, of course, much higher than that. And that's it. That's all the charts on here. Let me just read the final article. I haven't read the or paragraph. I haven't read this yet. To expect a 17 or 18-year-old to understand, this is hard to see, but parents need to step it up. But with the average per worker salary being 25K, it is doubtful many parents have the resources to run an in-depth market analysis when it comes to choosing the right school or program. As usual, do your own due diligence and don't be fooled by the notion that all colleges are created equal and that college is priceless. At these cost levels, you better believe that there is a significant price. And again, the best thing to understand is how debt's guaranteed, and then you can see how a lot of things like this are going on. And then if you want to make change, then if you're smart, figure it out. Take care.